All right, vacation's over, weekend's over, back to work we go. We got some money to make this week together, don't we? And boy, that big move higher we saw today, we just broke free of that big nasty range we saw last week. That tells us one thing for tomorrow. Breakout pullbacks. Breakout pullbacks are probably where the money is made on Tuesday morning. In fact, I have two, maybe three variations of breakout pullbacks. I'm going to cover those details in tonight's video because by the time we're done tonight, you'll have a roadmap, a game plan to make some money on some breakout pullbacks with us tomorrow morning in our trade room. So charts are ready. Enough of the intro, right? As always, thanks for tuning in and watching my videos. Boy, I missed you guys last week. Hope you guys made a bunch of money. We're back to work though here for a big week ahead of us. S&P SPY ready to go tonight. Nasdaq triple Qs are ready. I've got 4 clues on these charts telling me where I think the money is made tomorrow. First clue is right here on the hourly time frame. It is very easy to see right now the buyers are in full control momentum on the S&P SPY. Buyers in full control, the Nasdaq triple Qs. One big clue. The buyers are in full control of momentum. Second clue is in the calendar for tomorrow. The government shutdown continues. We don't have any major news tomorrow, Wednesday. We really don't have any major news this week until CPI comes out on Friday morning. We'll talk about that later on in the week. The big news, though, for this week is we kick into earnings season. Tomorrow night, Netflix. Wednesday night, Tesla. Thursday night, Intel. What that means is if you trade in the afternoons this week, be aware of volatility before the closing bell this week. We'll talk about that more tomorrow in the trade room, but be aware of those big earnings reports after the close. Be careful after 2:30, 3 o'clock. Markets do weird things leading up to those big earnings reports, so be aware of that for tomorrow. Let's get back to our charts though, because the money is made on the charts. Third and fourth clues are down on some tick charts. Tick charts make entry timing a whole lot easier. And if you're watching for the first time right now, welcome to the channel. That is a 7,000 tick chart. All the time frames there, upper left-hand corner. And that, my friends, is the only indicator we use to find consistent, repeatable profits. It is the 21 EMA. I see two really important clues here right now on this tick chart. One big clue, a big move going higher. Now, big moves, anytime I see a big move, I don't want to buy high. I want to buy low. Nice deep pullback, right? Deep pullback. That's the secret sauce on a big move going higher. Don't buy high, buy low. That's one big clue. But arguably, my favorite clue for tomorrow, there are 3 ranges on this chart. Range right there, and my favorite range is the range we saw, what was that, late Friday, early Sunday night. Now, all 3 of these ranges give us a really big clue. For example, breakout pullbacks. If you watch my videos, you know breakout pullbacks are one of the most consistent ways to make money. But look closely at this though. One of these breakout pullbacks is much deeper than the other. And so we have to talk about this tonight because a breakout pullback zone here, we can't trade that the same way as the breakout pullback zone down below us. We'll cover that as we go deeper into tonight's video lesson. This range. Now, remind me again, folks, what do ranges do? They love to rotate, right? They love to rotate. Now, we have no major news tomorrow, but a bunch of earnings this week. I'll bet we have scalping opportunities tomorrow. I want to talk about some key scalp trades tomorrow, trading this rotation back and forth. That could be some really easy money for us tomorrow in our trade room. I'm going to cover that technique a little bit later on this video. My favorite trade though, let's start there first. My favorite trade. Anytime I see a big move like this, I don't want to buy high, right? I want to buy nice and low. When I see a big move like this, the first thing I think of is a 2-legged pullback. Now think about measured move, right? A measured move, A, B, C, D, a 2-legged pullback. My favorite trade for tomorrow is get that 2-legged pullback. And then right when this market feels very bearish, once it feels like a bearish reversal, remember, this is the tick chart, right? The tick chart is for entries. not for direction. That hourly chart, that is for direction. So as we get that two-legged pullback, this will feel like a reversal. It's probably not a reversal. So because of that, I want to find a bear trap down here. Let this thing pull back to that moving average. Bears try once. Bears try twice. Remember, always a higher high, right? Bears once, bears twice. Now, once those rookies are committed, once they're trapped in short, now I know where their stops are. Now I know where their pain is. Now I know where sellers get forced to buy their way out of their position. And I use simple, what I call a two-try bear trap to squeeze those stops and run all the way back up and retest that high. Now remember, on a deep two-legged pullback, now we have all this open space to work with. So as the bear trap begins to work, we then start looking to add to our winners. One of the easiest ways to make a lot more money is after you find a nice deep bear trap, look for this pattern, separation off the moving average. Like over here, right? The pullbacks, right? They separate away from that moving average. That separation is the setup. We see a higher high in price. I'm going to add a half, a quarter back on right below that low. In our trade room, we call these two-legged pullbacks bear trap, add on, and we're trying to go right back up and retest that high. Now, one thing I want you to be aware of, we don't always get that bear trap down there. In fact, a lot of times after a big move like this, a lot of times we see a nice, beautiful two-legged pullback, but instead of a bear trap down there, it just goes whoop and runs right back up again. Now, V-bottoms can be tricky on the emotions. If it V-bottoms off that low, I then start watching for price to grind going higher. Once it grinds going higher, now we know how to structure the entry. Mark a trend line off the highs. Bring that trend line down around that low. See that channel now? Now, very important, pay attention. Mark some of these prior swings, and the money is made right below one of those prior swings. Ideally, I want to be below a prior swing low, and I want to be what we call first test is the best test off the low of that channel. Now, this could be any of the entry patterns you guys are learning in my free video course. Could be a trap pattern, like I'm showing you here. Oftentimes, we get below that 21 EMA, bears once, bears twice. Again, any of the entry setups you guys are learning in the free trading course can be applied. The most important thing though is first test is the best test off the low of that channel. Now I have a couple more entry patterns I want to talk about in tonight's video. Before we do that though, let's slow down for a second, because I know most folks watching right now, you guys know these patterns, you're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy for you, a brand new language I'm speaking right now. Don't you worry though, I teach all of these entry tactics. I teach this entire roadmap in my free trading course. Guys, the bottom line, the markets are way too good right now not to be banking consistent profits. What I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells me exactly where to find the winning trades each day. It is remarkably simple. More importantly though, let's face it, we make our money by timing good entries, right? So I want to teach you my 4 favorite entry setups. You'll learn those in that free video course so you can time better entries, get your confidence back. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, what are you waiting for? Hit that link that popped up there and watch that free trading course, because everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Be aware too, guys, I'm going to put all the important links you'll need to learn this roadmap. I'll put them all below tonight's video in the description of the YouTube video. Start first on that free video course. Get your confidence back. Get your P&L back in the green again. Most folks start making money money all on their own, all from that free video class. So start there first. And don't forget too, we trade together every morning in our trade room, 8 o'clock Eastern time. The place to be is in the SOT trade room. I'll put that link down below tonight's video. If you're on Twitter or the X platform they call it these days, if you're on X, I'll put my handle down there. I post a ton of videos and charts and mindset stuff on the X platform. If you guys are on there, give me a follow. Again, all the details you'll need to learn more, learn the strategy, time the entries properly. It's all below tonight's video description of this YouTube video. All right, that's where you want to go if you're watching here for the first time right now. Now, I mentioned earlier, ranges like this, they love to rotate back and forth. And I think there could be some easy profits scalping back and forth up there before this earnings comes out tomorrow afternoon. I'm going to talk about that a bit later here on this video. But here's a question for you though. What if all we get is a one-legged pullback, right? Because I mean, again, I want a two-legged pullback. A two-legged pullback, again, a measured move, are my favorites. Bear trap and back up again. But what if we only get a one-legged pullback? Well, there's two things you want to be aware of. On a one-legged pullback, I'm not able to buy low, right? I'm buying relatively high because of such a big move that we saw this afternoon. So right off the bat, I'm already concerned. The second thing is that we know that big moves, they oftentimes make two legs. So on a one-legged pullback, I have to be careful because I'm not buying low, relatively speaking, the big move we saw today. Most importantly too, the sellers are going to be trying to knock that sucker going lower for that second leg going lower. So if all I get is a one-legged pullback, is a very small adjustment we always make. It's called a technical bear trap. A technical bear trap is very similar to a two-try bear trap, except one small detail. Bears try once, higher high, bears try twice, and I want to get in right below that low. See, here's why this small detail is so important, because here I'm buying as low as I can. I'm buying underneath a prior swing. The reason why this is so important is because oftentimes what happens is we'll get that signal, it'll try going higher and then make another leg going lower to complete that two-legged pullback. See, this works if I get my entry below that low. I can take a one-to-one quick target, get rid of that risk, get stop loss moved up. If I buy up here though, right? If I buy as it goes higher, now I'm buying right into what is oftentimes a bull trap or a bear trap in this situation. So again, a two-legged pullback is prime because now I'm buying nice and low. Now I can trap those bears in and I have a great risk reward ratio on that trade. I can be a lot more aggressive on that trade. And like I teach in the free video course on shallow pullbacks, or in this case, a one-legged pullback, the most important thing about buying down here is going to be trapping the bears in so I can use the stops to fuel the move higher. But more importantly, I need to get in underneath a prior swing. Now, these come in lots of shapes and sizes, right? A lot of times they'll pop up with that V bottom technique and we'll start grinding going higher. I can find that new channel like I described earlier on this video. And again, the most important thing though is I want to be getting in underneath prior swings. Now, in this situation, where's the market trying to go now? Well, remember, ranges love to rotate, don't they? So if we can get the breakdown going lower, one-legged pullback, I'll measure the amount below that trading range. I'm going to bring that amount now up above that high, and that creates that target going higher. We call these pendulum swings in our free videos. And of course, we'll do it together tomorrow morning in our trade room. So a one-legged pullback, the most important thing is it's got to be below a prior swing. Now, one more thing I want to talk about. Remember, big news coming the rest of the week this week. We oftentimes will see a beautiful two-legged pullback. We'll nail that two-try bear trap, bears once, bears twice. We oftentimes get a nice, easy winner on these two-legged pullbacks. But every once in a while, the strength of that move down is so strong, we'll get above one of these highs and we'll see another leg going lower. Now, this is where you have to remember, this is the tick chart. Tick charts are for entries, not for direction. It will take a lot more than a retest of that low to turn this bull market into a bear market. Remember that hourly time frame we saw earlier. Now, these are called retest trades. And retest trades, well, they may become your favorite trade. I love retest trades in our trade room. The bottom line is this: we'll get that bear trap winner, get that first target, get that stop moved up to point of entry. We'll leave a runner to go back to those highs here. But again, oftentimes though, the bears will come in. They'll trap above the highs right there and run that thing back down to retest the low. Now, I'm going to warn you right now, on these retest trades, it's going to feel like a reversal. It will. These are always scary. But as we say in our videos, right? We always say on these videos, the scarier the better. The more uncomfortable you are, usually the more profit we make. So when it goes back and retests that low again, remember, this is not a reversal. It's a second bite at this apple. It is the same exact trade. In fact, I oftentimes go even more aggressive on these retest trades because anybody who sells on that move lower, they're taking their profit. They're buying their way out of that position when they retest that low. Do it again. Bears try once, bears try twice. And remember, when you get that bear trap working for you, don't just sit there and kick back and relax. Take half your profit targets off, get rid of that risk, and add that half back on once you start seeing that separation away from the moving average and that higher high in price. Separates off the moving average, higher high in price. Under that prior swing, it's a retest trade. It's a bear trap. It's an add-on. It's a double bottom retest trade. It's a gift to the trading gods, if you ask me, and leave that runner back up to retest that high. Those are some of my favorite trades on a deep pullback along with a shallow one-legged pullback. But now let's talk about some scalping trades here for tomorrow, because again, we may wind up kind of rotating inside this range here until the end of the week, until we see that CPI report come out on Friday morning. Let's go talk about Nasdaq right now. Nasdaq's getting lonely over here right now. Nasdaq's very similar to the S&P here as well. Now, first things first, don't forget, on the hourly time frame, we're definitely not a bear market, right? We're definitely a bull market. That range we saw last week, rotating back and forth, we've now broken pretty well above that pendulum swing. It's tough to call this a bear market right now. Bullish market, that's our directional filter. Now, we're not going to time entries on the hourly chart, are we? We're going to drill down to some tick charts here. Before we talk Nasdaq and tick charts, I want to share something with you I've been working on the entire year this year. You know, we all know AI is the technology of the future, right? And I recently built an AI tool that gives me an advantage over every other trader on the planet. I use this AI tool in my trading, in my personal life, and I'm completely addicted to it. So if you're like me, looking for ways to leverage AI to make better trades each day, make more money in your trading, what I'll do is I will drop a link below tonight in the description of the YouTube video, or just scan that QR code popped up right there on your iPhone and try my new AI productivity tool called VoiceTap. I'm going to warn you though, one warning though. Once you start voice tapping, once you use that AI tool, you will never want to stop. Again, I am completely addicted to my tool on my phone. So again, use that link below or scan that QR code for a free download and let me know what you think. Now let's dive in and talk about that Nasdaq chart. Down to the Nasdaq chart right now, again, a tick chart. Tick charts are always easier for entry timing. You can see right away that big move higher. Again, anytime we see a big move in one direction, a deep pullback, right? A deep pullback. One big clue there. Three ranges. Range right there. Range right there. Big range down here. Very similar we saw earlier on the S&P. Would love to get that two-legged pullback. Think measured move. Think bear trap and back up again. We talked about the bear trap down there. We talked about that V bottom trade earlier on tonight's video. We talked about the retest trade a few moments ago as well. All the stuff we mentioned earlier in the S&P can be applied to the Nasdaq as well, especially the one-legged pullback, right? The one-legged pullback. The one-legged pullback, even more important here on the Nasdaq, because what's above us? The all-time highs right there, right? So one-legged pullback. Remember, the key is on a shallow pullback, get in below prior swings. It's always going to be the name of the game on a shallow pullback, right? Higher high in price, get in right below that low. Now, let's talk more though about the range up here. Ranges are magnets and they love to rotate, don't they? So we mentioned this earlier briefly here on the S&P, but it's important to remember though, right? This range is going to want to rotate back and forth. Now, when I say rotation, we use things like pendulum swings. We use things like triangles, right? So pendulum swings, the amount below, the amount above, the amount above, the amount below, right? Basically symmetry above and below that trading range. We love to use triangles or megaphones, right? Expanding or inverted triangles. Ranges love to rotate. Now, very important. We're a bullish market overall. So knowing that we're bullish overall, I can be a lot more aggressive buying off the low than I would be selling off the high. So let's talk about that. As we go lower here, my main goal is, again, because of such a big move higher that we saw today, my main goal is going to be getting in below prior swings. And these come in kind of two different shapes and sizes here. One is that technical bear trap, and the other is going to be that add-on trade that we mentioned earlier. The most important thing, again, because we made that big move higher, the most important thing will be buying below prior swings on the initial move down, because again, it may try to go for that second leg going lower. That's where the bigger money is. But again, a technical bear trap to try technical bear trap and an add-on trade. These are, believe it or not, they are the exact same pattern. One is more of a reversal pattern. The other is more of a continuation pattern. They both, though, have that higher high in price. They both, though, have that move right below that low. Now, here's where things get interesting. The amount below the range, I can now project now back above that range, right? There's my target. Now, how would I know when to buy a breakout going higher? And how could I sell it going back down into that trading range? Well, remember, up here, we're going to be careful, right? Because we're bullish overall. This is where two things. One is a crown reversal pattern necessary. And two, it'll be a half size trade, or at least for me. For me personally, whenever I go against the trend, it's always a half size trade, right? So full size position off the lows, but half size trades off the high. Watch this pattern closely. Remember, we're very bullish overall, and in this scenario, momentum is very strong for the buyers. I need to trap in my sellers up here, trap my buyers in up there, so I can use your stops to fuel this move back down again. To do that, I'm going to make sure, first of all, I wait for that pendulum swing to get hit. Always want to make sure you finish off that pendulum. Once the pendulum is now finished off, now we wait and see what happens on that pullback. If I see buyers come in and try once to go higher, lower low, try twice to go higher, very important, needs to be a lower low because buyers want to buy low. So trap them in once, trap them in twice, and then I've got to get above that high right there. We call these crown reversal patterns in our trade room, right? A crown reversal pattern. Again, it's basically a two-try bull trap with a short above a high, closing back below that moving average. Now, you're not going to see these patterns every time. But again, when I see them, half-size trade, quarter-size trade. What is very common in these scenarios is to run up and begin to grind going lower. When it grinds going lower, connect those lows, up around that high and go looking for, as we always say, the first test is the best test off of that high. These are more common than trend reversals. What'll happen is it'll rotate lower, run higher, it'll get whacked back down again, begin to grind, going lower. We mark that trend line, find that channel, mark that swing, and we never miss that first test is the best test, right? Again, the amount we go above the range, project that now back down below the range. That tells you now where your exit is. It also tells me now where to look for, you guessed it, some bear traps down here, right? Bears once, bears twice. Keep on trapping in those traders. Keep buying low with full size. Keep selling high with partial size. Now, one more question here. What if we go higher here? How would I know? What would be a good giveaway that would tell me that it's safe to now start buying maybe a breakout pullback? It'll be separation off that moving average. So if we run lower, whether or not we get the bear trap down here or not, if it pops up and begins to grind and separate away from that moving average. Remember the separation, look over here, right? The pullbacks never pull back to the moving average. When it separates off that moving average, separation equals strength. So be watching to see if they separate. If they separate and grind away from it, I'm no longer looking now to be a seller. That's too much strength now in an overall bull market. Now we should focus now to a breakout pullback. That range high now comes into play. We find that new channel comes into play, right? Yeah, now you see what I'm doing here. Mark that low, get that breakout pullback, that bear trap, 2 tries, and we're running back up to retest that high. This will be something to watch for tomorrow morning in the trade room, right? It'll pop up, it'll grind going higher, it'll separate. That's a big clue. Then we find our channel, mark that channel. We look left. Where can I use what was resistance as support? And we combine that with get below that 21 EMA, use that 2-try bear trap pattern I teach so much in the free video course, and we're buying right into those stop losses. These are pretty easy money when you get all of these components together. The separation, the pullback, the channel, the top of the range. I'm getting excited to talk about this stuff with you guys here every evening here on these videos. Guys, that's my game plan for tomorrow morning. Speaking of tomorrow morning, 8 o'clock Eastern time, the place to be is in the trade room. Come join us. Come trade along every morning at the opening bell. The easiest way to start making money consistently is to learn and trade along every morning with us at the opening bell. As always, I'll put all the important links you need to learn the roadmap, time better entries, get your confidence back, finally get your P&L back in the green again. Start first with that free video class. You're going to love the trade examples there. Then come join me. We'll trade together sometime soon in the morning room at 8 o'clock Eastern time. In the meantime, guys, be well out there. Be nice to the will ya? And be here next time. Adios, amigos. Bye for now.